Yes. And so we went out and we raised a seed round of capital on a convertible note. And
what does that mean?
And so I'm glad you asked, because that was something I wanted to get into for a lot of entrepreneurs, especially in the Midwest. They're not as familiar with convertible notes. And so a convertible note is technically debt financing, but instead of paying an interest rate in cash, the interest rate is paid in shares. And so when you issue a convertible note, you issue it off of a cap, right? So a cap is basically your effective valuation you're going to give the investors when you actually go and raise a Series A round. So whoever buys a convertible note is basically locking into an effective valuation that will be lower, obviously, than what you raise your Series A at. And so you either get the cap as an investor or you get a discount to your Series A, whichever is more beneficial to the investor, right? Obviously, if you're doing your job right, you want to be able, investors aim to get the cap because hopefully your Series A is above the cap and that would be more beneficial to the investors. And so when you go out with a convertible note, you basically dictate what that cap is going to be, what's the discount to the Series A going to be, and you negotiate that both of those. And then what's the interest rate you're going to pay on that convertible note, which again is paid in shares. So accumulate shares. And so everyone invests in this note. You hold the note like any other bondholder. Again, it's technically debt, but the nice thing is you're not paying cash money, which you don't have when you're raising your seed round. And that convertible note converts into preferred Series A equity when you go and raise an official Series A. Why do you do that? And this is the problem and challenge with a lot of Midwest entrepreneurs is you have no clue what your valuation is. And so when you don't even have a product, you certainly don't have revenue.
This was before a customer or anything?
Yeah. I mean, for us, we had a few customers, but we didn't have revenue.
Yeah.
And our customers were more like pilot customers. It wasn't like we were working with a JP Morgan. We were working with local RIAs, your Chicago Wealth Management Partners. I'm just making up a name.
Yeah.
And so just a local RIA to get the proof of concept. And we strategically started with those types of clients because it's an easy yes. A lot of entrepreneurs go to the big whales, right? Of like, oh, I'm going to go and try to get a big contract with, if you're in capital markets, a JP Morgan, a Credit Suisse, a UBS, a Bank of America. You'll run out of cash before you close that deal. Those deals take years. And we knew that because I spent my career at one. And so we went out to the independent RIA community, which are wealth advisors at a Schwab and a Fidelity. If they like the product, they can say yes, and you can trade today. And that was really smart for us. So getting back to the convertible note, at the end of the day, what was nice about this, I had no clue what my valuation is. And so I was like, okay, we're going to set a valuation. If I'm wrong, Mrs. Investor, on what I think that valuation is, great. I'm going to give you a 20% discount to the Series A. So if you think I'm overshooting on the cap that I'm putting, I'm going to give you a 20% discount, which was our discount to the Series A. And so let's say our cap, which it was a $15 million cap on our seed round. We gave a 20% discount. So if we did our Series A, to do math, right, at $10 million valuation, well, they're not going to get the cap because the cap's at 15. They're going to get the 20% discount. So the convertible note holder's effective valuation would have been $8 million. Now we did our Series B round or Series A round, at a $35 million valuation. And so,
and how'd you reach that valuation?
On the Series A?
Yeah.
Well, it's, but by the time you get to Series A, you have like clients, you have revenue. So it's a little combination of Series A of, do they believe in the founders? Do they believe in your vision? Do they believe in the addressable market as something that's interesting to invest in? But then it's also a blend of real numbers, right? It's like, okay, have you shipped your product? Are you creating revenue? It might not be a lot, but are you creating revenue? And so in your seed round, right, your pre-Series A, you hit the nail on the head. That's the hard part, is how do you derive a valuation? You don't even have a product. You barely have a business plan. You're trying to convince someone to believe in your dream. And so that's what's the beauty about a convertible note, is that you as the entrepreneur don't have to stress about, oh, do I have the right valuation? Am I giving up too much, too little? La, 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 la. And it worked out well for everybody because I got, the shareholders got that interest rate that accumulated in cash, for the 2 years that we had that convertible note until we raised the Series A, and they got a great valuation. And the reason why this is important, not to belabor the point, but the reason why this is important, I see a lot of entrepreneurs in Chicago who, specifically, because that's where we're based, where they go out and they raise their Series A at $5 million. And they raise it at $5 million because a lot of the funds, in the Midwest, and now I'm proud to see those funds getting larger, but a lot of those funds are, $50 million funds. How many portfolio companies do you have in a fund? Well, about 30. So you can do the math, right? What's the capital that they're putting into any of those companies? It's about $2 million. If you look on average across all the VCs, a lot of VCs want to take a pretty big chunk in your Series A. And so they want to take 40% of your company, 30% of your company right out of the gates. Voila, they have $2 million to invest. They want 30 to 40% of your company. There's your $5 million valuation. That's how they derive the valuation.
Wow.
And so a lot of entrepreneurs don't think about that. And so when you go out and raising capital, consider convertible note, because that can take all of that stress off the table. Does that make sense?
That makes total sense. I think that was a masterclass in the convertible note, because you see that sometimes. Everyone always talks about the Series A, B, C, but when I get asked that question a lot, what does the convertible note mean? And we had finally someone come explain it.